Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me, market site Surad Mukherjee. He's the CEO of Ambit Capital, and we're going to focus on long-term investing in India. Thanks so much for joining us.
My pleasure.
At Market Site, and that seems to be the theme this morning, is that we're seeing household savings growth in India, and that's starting to make its way to growth in GDP and a lot of other areas within the economy.
Absolutely. So we're already saving $250 billion a year in household financial savings. That's around 10% of our GDP. And Jill, I reckon this number is going to grow steadily over the next decade to something like $1 trillion a year, 10 years out. And what that implies is not just growth for the stock market, but growth for the overall savings ecosystem, for asset management, wealth management, life insurance firms, and so on. And overall cost of capital in India has halved in the last 10 years. So 10 years ago, cost of capital was 15-16%. It's now 7-8%. And obviously bodes well for a low-income emerging country. This sort of financialization, this sort of savings boom bodes very well for the country.
Are you seeing Indian companies outperform other parts of Asia?
I think if you look at 3, 5, 10, 20 years data, the Indian markets outperform the Chinese market. I think the two big economies in India, obviously India and China. What's very interesting, the Chinese economy has grown fast historically, but the Indian market's given better returns. I think part of the reason for that is you got dominant players in the Indian economy, whether it's in auto, whether it's in FMCG, banking. You got dominant firms who are consistently able to generate high ROEs, high ROCs. And these sorts of companies, what I've seen in the last 10 years is they're giving you roughly 10x in 10 years, 25-26% compounded. And I think that's a unique phenomenon to India. Big economy, $2.5 trillion, growing at 7-8% a year, but dominated by large companies who are giving you very handsome returns. And that obviously is driving the financialization that's sucking retail investors into the stock market as the retail investor seeks a slice of the GDP growth action.
Do you think higher oil prices can potentially hurt Indian stocks, at least for the short term?
So oil is a familiar villain for India. We obviously import almost all of our oil. It drives our current account deficit. It weakens the currency. I think in the near term, the rupee clearly will continue to stay under pressure. It's at 68 to the dollar. I think we'll punch through 70 to the dollar, perhaps move towards 75. We haven't had a slide in the rupee for a good 4.5, 5 years. We're overdue a correction in the rupee. And I think anybody looking at India today, whilst you should be optimistic about the country and the stock market, I think factoring in a 4-5% depreciation in the rupee would be wise at this juncture.
Yeah, but with all the growth, it could be a great value opportunity as well once oil prices get back into a more normalized range. But what about the general election impact on the Indian stock market? For our viewers, explain to us a little bit of that history and what you think, how it's going to impact the market.
So we follow the English style of parliamentary elections. So every 5 years, the country goes to the polls. The leading party, the party which gets the most seats in the lower house of parliament, then chooses the prime minister. So 2014 was the previous election and the current government came to power. 2019, next year, spring is when the next elections are. And whilst there will be plenty of noise and publicity around the election, the good news about India is politics actually matters far less for the Indian economy and for the stock market than you would imagine. The country's growth has trended up for 50 years. For 50 years, every decade growth has been better than the decade before, regardless of which government has come to power. So whilst it's great entertainment to watch the Indian elections, it's the world's largest elections. More like 500 billion people go to vote. It's great entertainment to watch. The impact of it on the general India story, the growth story, is actually fairly modest. So watch the entertainment, enjoy the elections.
Oh, we know all about that.
But don't get dissuaded from investing in India.
All right. Well, thank you very much for joining us at Market Site. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.